program is brought to you in association with First National Bank of Botswana.
FNB, how can we help you?
First National Bank of Botswana has had quite the impressive year. The bank announced a 35% profit after tax for the full-year period ended 30 June 2022, after contending in what seemed to be a challenging economic climate. The results also indicate a 25.7% return on equity and a dividend per share of 26 tebe. Good evening and welcome to First Issues. In what was a rather difficult business atmosphere these past few years, First National Bank of Botswana showed gutsy resilience, growing its number of customers to just over 630,000, an impressive growth of about 20% from 2019. With geopolitical tensions intensifying, a global economic growth slowdown, what strategies are at the bank to sustain that strong financial result? Present here on First Issues from the largest commercial bank in Botswana are Chief Executive Officer Stephen Bogatsu, who will speak on the business arm of our discussion, and Chief Financial Officer Luke Woodford, who will later speak on the financials. Steve, thank you so much for coming on First Issues and affording us your time. As ever, it's norm to be here at this time of the year to talk about the bank's financial results, right? And they've been very, very, very strong this full year. Please share with us the type of business approach that was adopted that led to this stellar outcome.
Thank you very much. You know, when I started this role, a wise man once said to me that we are giving you these assets to add value for the shareholder. And the least that you can do if you don't add value is ensure that you do not destroy the assets. So for me, that reality came when we were confronted with this pandemic in 2019, 2020, 2021. So the results are a reflection of the strategy that we took to preserve the business. We knew that we were facing a situation that obviously made it very difficult for us to grow our balance sheet, a very low interest rate environment, and therefore it was not advisable to take unnecessary risk on the business. So we therefore approached the business strategy in three ways, because the environment was simply not conducive to growing the balance sheet. The whole world had frozen. It was very difficult to actually envisage a situation where the balance sheet was growing. And as a matter of fact, many of our customers had marked facilities that they were not utilizing. So our approach was to be prudent with balance sheet growth. Number two, to insulate the income statement from the shocks that were likely to occasion the disruption that we were feeling around COVID. And number three, to ensure that we were cost efficient. In addition to these three, we also knew that we needed to afford our customers the opportunity to actually continue with their banking, despite the fact that the economy was under lockdown. So when you look at the results, you will notice that the balance sheet only grew by about 8%. Impairments were properly controlled because we put a whole team, structures, processes, systems in place to assist our customers manage their exposures. Thirdly, we ensured that our customers were enabled to transact wherever they were. and therefore our NIR grew significantly by about 15% or thereabout, purely based on the volumes, increased number of customers as well as volumes that our customers were beginning to churn through the digital platforms.
Steve, you constantly and repeatedly mention customers, which brings me to my next question, right? We follow these results to perhaps gauge how consumers or customers are doing in terms of servicing their facilities and the everyday transaction, etc., right? So would you say that this jump in your financials indicates that consumers or your customers are recovering or have already recovered from the economic effects of the pandemic?
If I cluster our customers into two segments, the individuals, which is basically the retail, as well as the commercial stroke corporate, I would say based on the impact of the pandemic, the consumer is still very much under a lot of pressure because a number of things have developed. Number one, jobs have not been created at the speed that is required in the economy. Number two, with all the pressures around inflation as a result of a number of factors, we find that our customers have pressure on their incomes. Some have been retrenched, some have had to go on reduced income, and therefore their ability to service their facilities were impacted by the various factors. So we have to continue being prudent around lending to the consumer based on the factors that I have just mentioned. However, what we are beginning to see on the corporate commercial space is that most businesses are now taking advantage of the lines that were availed to them before COVID. So what that says to me basically is that they are finding opportunities to grow their businesses or to even expand their businesses and go into different revenue streams. Now, should that continue, it will ultimately impact the retail side because this growth means employment opportunities are created. So to summarize it, the consumer is still under pressure, but there's a positive outlook on the horizon given the developments that we are beginning to see around commercial and corporate insofar as creating job opportunities are concerned.
We're still on customers, and one of the challenges that they continue to contend with is inflation in the country, which continues to soar. So much so that Botswana is now considered a hyperinflation economy. So how do you see this affecting your customers and then ultimately the business in the long term?
And it's important to actually highlight that it's not only Botswana that is in that hyperinflation environment. In Europe, we know that a number of countries, including UK, are under similar problems, similar situations. But to zone into Botswana, what does it mean for our customers? It means our customers are going to have to contend with high prices as a result of this inflation. It means because the central bank has a focus on reducing inflation to their target of between 3 and 6%. They are going to use interest rates to curtail the inflation. And therefore, we're going to continue seeing an increase in interest rates. Obviously, an increase in interest rates means facilities or loans for customers become more expensive. So customers have to find additional income in order to service their revenue. This is the same customer who is under a lot of pressure because of inflationary pressures. So we do not anticipate that from a consumer perspective, we're going to see a sharp increase in credit extension. They will continue being under a lot of pressure. However, we do anticipate that from a commercial and corporate perspective, those who are seeing investment opportunities and growth opportunities will continue borrowing. So the advice to the consumer under these circumstances is actually to be very, very careful and exercise caution with their borrowing, and rather opt to pay their facilities earlier rather than later, and to save more. So if there is an opportunity to save, because the interest rates currently in the environment favor those who are saving more than those who are borrowing.
You know, Steve, the First National Bank of Botswana is known for its customer-centric approach to banking, which has led to its very impressive customer experience, if you will. So how do you plan as a bank to further improve customer experience moving forward?
That has been a focus area for us. It would not make sense for us to put in all these initiatives if at the end of the day it doesn't benefit the customer. So we have put in place in the past a number of things that include operating a call center 24/7 now. The call center used to be only limited hours, it's now 24/7. We have introduced a number of solutions that enable our customers to actually self-service, to actually use banking services as and when they need to, wherever they are, without necessarily coming to the bank. So we will continue doing so. One of the biggest pains we know for our customers has been KYC. So in the next couple of months, we will be unveiling solutions to our customers, which will enable our customers to do KYC, to take total control of their KYC. Thirdly, we have beefed up our customer service area with a dedicated head of customer service, whose responsibility is to ensure that we make commitments around how soon we respond to customer queries. And fourthly, both customer service and customer experience used to be one and the same thing. We have now separated customer experience headed by a very capable individual whose mandate is actually to continue looking at all the solutions that are provided by the bank across segments and advise using analytics on where the trends are going and what products we need to be availing to the market, so that the customer experience and the products that we are offering are compatible.
Thank you for staying with First Issues. Our analysis of the FNB Botswana financial results for the full-year period ended 30 June 2022 continues now with Chief Financial Officer at the bank, Luke Woodford.
Luke, thank you so much for coming on First Issues. Stellar financial results coming through this full-year period. Briefly share an overview of them with us.
Thanks. We're very pleased with the outcome from the year. And I think the most pleasing part for us is really coming through from the impairments line and showing an underlying recovery of our clients, where they've managed to weather the COVID storm. And really they've seen the numbers and their production lines really picking up. So where we see as a bank in COVID, if I look at pre-2019, coming into 2020 and 2021, very difficult years for our customers. We had very high impairment charges, reductions in foreign exchange revenue. So we saw a bit of a baseline flattening out effect into our portfolio. In this year, we've seen a 35% growth in our profit after tax, largely driven through that impairment, also driven by a rebound in foreign exchange across retail, commercial and corporate, with travel recommencing, with trade picking up, and with that demand for foreign exchange services really picking up across all industries. We've also seen a pleasing recovery of the tourism sector, which I think as well, we had partnered with a lot of the tourism operators through COVID to try and help them with payment relief. A lot of those moratoriums have come to an end. The customers have really recovered well. And then we saw a 5% growth in our costs this year. So we've done quite a bit of investing into our platform. We've rolled out a few new services during the year. We've rolled out foreign exchange on app, FX on app for retail. We've rolled out some enhancements across the app and some additional security features. So quite a bit of investing happening, but a very pleasing outcome for us.
While these are undeniably very impressive financial results. The statement of financial position indicates that the balance sheet size reduced by 2% year on year following the special dividend paid in October 2021. If you could, please break this down for our viewer.
So we have had a reduction in the balance sheet size. We paid the 1 billion Pula special dividend in October, as you've noted. We also saw that over the year our deposit franchise hasn't grown. It's grown in pockets and has been offset by reductions in other pockets. So we saw retail deposits sitting at a 0% growth. We saw a lot of retail spend picking up this year. Commercial saw a 13% growth in its deposit base, aligned to the customer growth. And then in the corporate banking division, we saw a reduction in the deposit base as corporates saw an increase in input costs and they saw a demand for those deposits to be deployed into their businesses. So that's on the funding side and the capital side of the balance sheet. Then when we look at the advances, we did see a pleasing growth of 8% in the advances. This driven predominantly through the corporate advances portfolio. So corporates re-entered into the investment cycles. They looked for us to partner with them in funding, and we were able to provide a fair amount of that funding for their growth plans. We also then looked at the retail portfolio, and in the later half of the year, we were able to fund a fair amount of growth in the retail portfolio. So I think retail ended at about a 4% growth for the year against a market growth of 5%, versus the commercial and corporate portfolios that grew at about 16% versus 8% market growth. So we saw a very healthy increase in our advances book in the lower yielding but lower risk portfolios. So overall, balance sheet has reduced, but we're pleased with the components of it and very pleased to have been able to pay out that special dividend while maintaining very prudential capital ratios. So the bank's balance sheet is in a healthy position as we close the year.
Let us talk about the bank's non-interest revenue, which grew 15% year on year. Unpack the key contributors that led to this inspiring outcome.
We've got three main drivers to the non-interest revenue. Those are the foreign exchange revenue, they are the merchant services, and then the service fees. So service fees had grown 9% year on year. That's on the back of growing customer numbers 3%, but mostly driven from a very sharp increase in transaction volumes again through the year. When we look at the merchant services, merchant swipes, so when you take a card and you swipe it at a merchant as a retail customer, that swipe is free. But the money is earned off of then a commission as part of that transaction from the merchant. So our merchant services, we saw a rollout of another 1,000 point of sale devices over the year. We also saw about a 20% increase in the value of transactions going through those merchant terminals. And with those increases, we saw an 8% increase in our merchant service fees for the year. So also very pleasing, and that's sustained growth that we've experienced for quite a few years in a row. And then lastly, the foreign exchange services, where we saw a 30% growth. Now there's a baseline effect here that we've got to consider for COVID. So 2019, if we take that result prior to the 2020-2021 impact of COVID, and you grow that by 5% per year, you would come to this year's result around foreign exchange. But comparing 2021 to 2022, we saw a 30% growth in foreign exchange. Customers really, travel's picked up. We've launched all these new offerings that I spoke to earlier around. We also launched a multi-currency card in retail. So all the solutions that our customers have been looking for, we've managed to launch this year. We've seen that growth come through on the back of those solutions. Then we've started doing some additional products coming through in the corporate banking space, also bolstering that performance into the foreign exchange revenue line. So really all three components pulling their weight, FX being the outperformer this year, and we're back on track to where we were before COVID.
So Luke, where to from here?
So the bank's balance sheet is strong. Our income statement, our performance is sustainable, and it's also very strong. Really, I think Steve spoke to it very well in his speech where he was talking to what we would do as a contributor to society. So he spoke about our procurement spend. He spoke about our annual donations through the foundation. He spoke about a few different elements to it. So I think the Cash Plus was a big one for me. We ended the year with 650 Cash Plus agents. We've grown that and we continue to grow that. Those Cash Plus agents served 150,000 customers across the country and at over 100 access points that previously had no access to banking. So this remains a big focus for us. There's good growth for us coming from a customer base from it, but really just that focus on providing banking services across the country. And then another big one, I think we were very pleased to be able to run a branch revamped completely with local suppliers. That's going to continue to be a focus for us, so that procurement spend and pushing that to empowering and growing local suppliers across a number of industries. So the bank is there. Our slogan has always been, how can we help you? We're in a good financial position from a resource perspective to continue on that trajectory. And then obviously there's the digitization plan. So there's a lot of the work that's been done around digitization and how we embed kind of future thinking into our processes, embed some robotic process automation. And on the back of that, we should see a nice pickup again in customer experience where customers are interfacing with humans, but behind the scenes, there is a lot of work being done automatically, allowing the customer just a seamless banking process. I think it's a good year ahead. I'm actually very excited about it.
This program was brought to you in association with First National Bank of Botswana.
FNB, how can we help you?